Welcome to another expert interview. I say the same thing to start all of them. I'm always excited for our guests, and this is no exception because we get to talk to someone who's written many books, is doing amazing things, is connected to amazing people. It's just going to be fun, and I'm sure some of the stuff he's going to talk about are things, strategies, and ideas maybe you haven't considered yet. As always, I let my guests introduce themselves. So, Chris, tell us who you are, what you do, and then we'll dive in.
Sure. Chris Jarvis. I am the founder of Be the Giraffe, which is something that was birthed out of my 19th book, funnily called Be the Giraffe. I'm a recovering mathematician, actuary, financial expert who is helping liberate business owners from the pain and frustration of money, time, and stress. And I'm just here to help entrepreneurs any way I can.
Love it, man. Thank you for making the time for us. Let's talk about the book. I think that's a great place to start. And obviously we're talking the Be the Draft book, but there are more. What is the premise of the Be the Draft book? Give us an overview.
Sure. The people always ask, why do you, well, I shouldn't say always, but I do get the question, why the giraffe? And the obvious one is that it stands out. And most people in social media and marketing are trying to stand out in their industry. Somehow they want to stand out. Some people love the metaphor of reaching higher. What's interesting about the giraffe is all of that is true. The book is 14 chapters about a giraffe, unique things that to the giraffe that other animals don't have, characteristics, behaviors. And then it applies that lesson to your personal life and to your business. So the book is designed for entrepreneurs to help them with the personal life and the business. The reason for that is every entrepreneur I know, it's next to impossible to detangle the business from the money, from the life, because their identity is wrapped up in all of that is connected. So I love entrepreneurs. They take all the risk, they create all the innovation, and most of them get martyred. You know, it's a lot of work, and they end up working for their companies instead of the other way around. So this book is there to help the entrepreneur get more out of their business and out of their life. And you know, the why part of the book is the giraffe is the only animal that has evolved to become more vulnerable, not less. And that is the really important why part of the transition. It's not just standing out, reaching higher. It's and elevating others. It's getting vulnerable with being open about where are you, what's working, what's not working, and diving into money differently, business differently, life differently, so that you can get an honest assessment of where you are, you know, get from existence to consciousness, and then ultimately get to bliss.
Love that. All right. I was off camera, but I did grab it. I've got copies here. I thought I'd given them all up, but I do have one copy still. I want to ask a follow-up question. Is something you asked me when I came on your TV show, right? Is which chapter stands out to you? And I know it probably changes based on the journey and moment you're in, right? But which chapter resonates with your life right now? Just to give kind of people a sneak peek into the conversation.
My go-to answer is is either break free from the herd, or it's avoid the masses and the asses. Like those are my two go-to. But the one that for people who are into marketing, they're really trying to grow their business. My favorite chapter is Feed Differently. And Feed Differently is a chapter which starts by explaining this very unusual and symbiotic relationship between the acacia tree, which is the giraffe's favorite food, and the giraffe. And if you'll indulge me for a minute, the acacia tree has these long thorns and tasty leaves, apparently to a giraffe, but the thorns make it tough to strip and eat. So the giraffe uses this 26-inch tongue, and it wraps around, strips the bark and the leaves, keeping it safe, its lips and its mouth safe from the thorns. But what's weird about this is there's a resin in the bark, and the resin gets bitter when it gets stripped, and it's airborne. So after a while, eating for 5-10 minutes at the tree, the entire tree will become bitter, and the giraffe will have to move on to a different tree. So the giraffe cannot eat the tree bare. It's not possible. It has to leave some leaves for other giraffes. But it goes a step deeper, which is when the bitter resin is airborne, it goes downwind. So giraffes learn that all the trees downwind are also bitter. So it eats going upwind, which if you think about predator prey in the wild, Walking downwind is you announcing yourself to predators, but upwind, you're safe. And so in this weird way, the tree is protecting giraffes and it's preserving leaves for other giraffes. And so it's this very unusual thing that when I apply that to business, what I tell people is you want to have this uniquely invaluable relationship with your customers, with your employees, with your partners in a way that no one else does. So that whole feed differently, how can you provide something to the people you work with, the people you touch, your stakeholders, your investors, your community? Do something nobody else does. Like that's how you become memorable. That's how you become uniquely invaluable. It's how you become irreplaceable, is by doing things other people don't do or won't do. So that chapter for me is so important. It's not just what do you do, it's what do you do so differently from everyone else. And that's the drive, is what is that thing that you do? So you're looking for excellence, you're looking for market dominance, you're looking for something, right? You want your employees never to leave, you want your customers to never think about going anywhere else. You're looking to become uniquely invaluable, like beyond perception, so that you can keep doing what you're doing and doing it well. So that chapter, Devin, that's feed differently is my thing, because that's outward focused, right? That's what do the people I'm working with need, want, desire, whether they tell me or not. It's important.
Love that. It's such a good example, and I love that story. If people want to dive in deeper into the Be the Giraffe, you did do a TED talk on it that I think is 100% worth the watch. Before we move on to the money side of things and those books and that content, anything else on the Be the Giraffe conversation you want to mention?
Yeah, well, if you go to, whether you go to chrisjarvis.me or you go to bethegiraffe.com or Be the Giraffe TV, the wild factor is a place that you can start for free. So there's an assessment that is, the assessment is what I start any keynote with. So at chrisjarvis.me, there's going to be a hiding in plain sight, the words start here. And if you start there, and then you click to move forward, you can take the wild factor. It's usually $20 to take it. Use my last name, Jarvis, as the code. And for being involved with Devin, it's free. So you can take this, share it with your employees, share it with a partner or spouse, share it with business partners. It's an invaluable tool that I've used with companies like Microsoft and Cause It's by Design. But this tool will help you in 5 minutes or less figure out whether you're an eagle, elephant, monkey, dolphin, or penguin. And you may not know what that means, but what it's going to do is it's going to help you look at your life, your finances, your career, your relationships, your fun, your health. And then you're going to get to decide, with the hierarchy of how these come back, what things you actually want to improve. You might be happy with your health being last, or you might not be happy with your health being last, or you may not be happy with your money or your fun being last. But the key to this is for you to get context. The greatest compliment I ever got was at a Penn Mutual sales event to 300 salespeople. And a gentleman said, I've been coming to these events for 40 years. And my wife and I talked about your speech for 2 hours last night. And I asked if that always happened. And he said, don't be a smartass. Like, no, we don't normally talk about insurance conference speakers ever. Your talk was different than every other talk, the hundreds of talks that I've seen, because everybody gives me content. They just throw information at me. You're the first speaker who focused on providing me context. And so if you rewatch this or any other expert interview that Devin does, the question shouldn't be, can I do the thing that Jarvis is doing? Can I do the thing that Sizemore is doing? The question should be, is something that Jarvis or Sizemore or Stack or whoever else is being interviewed, is anything that they're telling me going to help me improve an area of my life in a way that's beneficial to me? So take the wild factor, not just so that you can go through my website or go through my books, but take it and use that as context for everything you do. because that should be your question. It's not just, can I do this? The question every day is, what, with some intention, what am I trying to improve? It's not just knowledge for the sake of knowledge sake. It should be knowledge for the sake of intentional application. And that's a part that people miss. I mentioned that whole existence to consciousness to bliss. That's the Sanskrit Sat Chit Ananda, and it's people just exist. They don't get to consciousness and truly understand what's going on. So really get to this understanding of what is it in your life that you want to improve. Because if you stay on autopilot, the order of these things will stay the same. So that's a big thing in the giraffe and in the wild factor, is figuring out, are you an eagle, elephant, monkey, dolphin, penguin? Each one is associated to you having a high score in one of those areas. I'm not going to tell you and map it out. You'll have to take the test yourself. You'll take the quiz, 5 minutes. You'll get a 19-page custom report sent to your email, and read it. It will help you leverage your high score. It'll help you identify blind spots, and it will help you address your lowest score. So again, this is for context. It's not content. Before I get into anything, how to build your company, how to save taxes, how to improve your life, none of that matters unless you have context for what in your life isn't working to the level you would like it to work, right? What isn't optimal? That has to be the starting point. What do I want to improve today? And once you have that, then you can start to process information and ideas on how you go from where you are to where you want to go. But you have to start with, where the hell am I now? What's not working to the level I'd like it to work, so that I can then address it. So for me, that's something we threw into the Be the Giraffe book. But you can go to the site, skip the book, use that context. And I would highly recommend, again, go to chrisjarvis.me, start here, go into the Wow Factor, use my last name, Jarvis, to make it free, and take it, and then share it with people close to you and talk about your results. There is something in there that will become fascinating. There's a lot of curiosity when teams do this. This is what Microsoft used. If somebody's an eagle and somebody's a penguin, they're both birds, but they're very different. Now there becomes this curiosity of, oh, well, Devin and I are different. It's a different animal. I kind of like that animal too. I wonder what makes us different. So now I'm asking him questions. So it's a way to create curiosity and connection without going down the road of, it's all the benefits of DEI without any of the stigma or the difficulty or the hot buttons that you get from getting into religion or sexuality or gender identification or color or race. The goal is curiosity. The goal isn't anything else. Let's just be curious about each other. So that the wow factor is such an important tool for introspection, but it's also an important tool for curiosity. And that's where all great interaction happens, right? It starts with curiosity in other people and what they're doing, what they're thinking, why they think it, why they feel it. So that's the biggest thing for me, is starting with, before I get into any recommendations, suggestions, ideas, tactics, tools, strategies, ideals, but got to have some context.
Love that. Talk to me about these two books. I have two more books sitting here. So I've got The Essentials, and then I've got Draft Money. Where do these play into people's worlds? What do you talk about in these? Is there an order people might want to digest these in, or who's a good reader for these? Go into depth.
Yeah, so those two books, Giraffe Money Essentials, the orange one, and Giraffe Money. Giraffe Money, the byline is Billionaire Secrets for Millionaires. The Giraffe Money Essentials is all about building wealth faster. So when I first started writing books, I was 26 years old. I was trying to get 50-year-old, 60-year-old physicians to hire me. And so it was really important to, at least it seemed important for me to try to overcome any limiting beliefs I had by proving how smart I was. So I wrote really long books about finance, asset protection, tax, insurance, investing. It was all information. And what I'm finding back then, when I started doing this in the 90s, the internet hadn't really taken off, and providing information was pretty important. Now, with the advent of obviously the internet and now AI and dozens of different chat bots and other ways to get information is not is not what people need. They need curation of information. You need less information. You need direction. So I took books that were 200,000 words and boiled Giraffe Money Essentials down to 40,000, 45,000. And the way I like to describe Giraffe Money Essentials is this is everything you're going to need to know to do 90% of your family's planning: financial, legal, tax, asset protection, retirement, insurance, investing. 90% of what you will ever need to do for the next 90 years, with the expectation that you can get it all done in 90 days. So how do you do 90 years worth, 90% of the planning you'll need to do for the next 90 years for yourself, your kids, your grandkids? And I want to make sure I get it all done in 90 days. I'm not looking for things I'm going to have to manage for eternity and pay people to manage. Just so it's all about high impact asset protection, investment, insurance, tax, business structure. It's a quick hit on what do you really need to know, not long, painful. I'm not writing about trusts in a way that a lawyer would write about a trust, because they're going to write about every single codicil and term in the document, which I've written about all that stuff before. And it's painful for me to write and more painful for you to read. And so I would rather give you what you need to know and how to go about implementing it. That's Giraffe Money Essentials. You can become knowledgeable about the things you really should do. Most people will do. 90% of people will do and be just fine with. So that's Giraffe Money Essentials. Giraffe Money is basically the premise behind Giraffe Money. I have had 6 billionaire families hire me. I have had dozens of $100 million families and countless $10 million families hire me to do planning for them. And what I can tell you is that if you're working with a company that advertises, that has a blimp, that sponsors a stadium, that is public, anybody with tens of thousands of employees, if you're making $1 million a year, you have outgrown their services. Like, you just have, because businesses are built to scale, and you've outgrown the products, the services, and the entire application. And so what I do in Giraffe Money, the white book, the silver book, is talk about the things that the highest net worth people do, but how do you do it and bring it down to a level that's cost effective, time effective for people who might be making $1 million, making $2 million, something like that. And the idea too that people at the highest level have full-time people working for them. People who are making $500,000 to $1 million are really busy. And the statistics show that if you make $500,000 a year, the odds are it's more than 95% that you will never make $2 million a year, because you have figured out how to make money by grinding. And you can grind to make $250,000 or $500,000 lots of ways. You can't grind to $2 million. It's really hard. It's just really hard. You have to build systems, and you have to build a business, and you have to build leverage, and it's a completely different thing. But once you have the taste of making $500,000, then it's really hard to step back and watch an interview like this, or attend a seminar or a speech maybe that Devin's giving. Like that whole thing is, well, I could be making money doing the thing that I do, so now I'm going to not make money and pay to go to the event. So people who make a lot of money are terrible millionaires because they're used to doing it themselves. And you'll just never get to that other level until you decide to step back and do something completely different. You have to manage and direct and delegate and CEO your way to that bigger number. You're not going to grind. I mean, you have to completely change that. So this is the more CEO type view of your wealth in Giraffe Money. So it's a higher level book as far as the level of the strategies. There's a little more philosophy in that book, because I got to get people past, the other one is let's do it fast. Fine, I can do it. I can direct it. This one is a little different. It's a little higher end.
Love it. Let me ask a question. Angela put, an exit strategy covers many angles. Is your focus specific, like saving tax, insurance, building and growing a business, systems? Like where's your zone of genius, and where are you playing?
Yeah. So as a mathematician, when I got into finance I'm 55 years old. When I was in my mid to late 20s, I got into finance, and I didn't really have a whole lot of respect for the investment bankers or the investment management people. And I felt there were a lot of promises and then a lot of explanations on why they didn't meet their promises. So I went toward tax because I was a mathematician and it was something I could prove very quickly. Did I save somebody $500,000? Well, then I definitely did. And they had more money after the fact. So I started in tax. Unsurprisingly, people who want to save a lot of taxes make a lot of money. And what I learned from thousands of people calling me was people who make a lot of money do a lot of wacky shit. And so basically, I have this 30-year masterclass of working with thousands of entrepreneurs who did wacky things. And so tax always pays for everything. I would say the primary reason why somebody will hire me is because they're going to pay me some amount of money and I'm going to save them that much money in year one. That's the obvious reason. But the ones who are a little more forward thinking realize that the structures we put into place that free up cash flow, grow companies faster, eliminate tax on sale, eliminate tax on estate transfer, those things will end up creating massive legacies. So they look at it and go, ooh, that's my second reason to hire you, is because I think you're going to create massive enterprise value for me in the business, because these structures are going to compound upon themselves. And so there's a big piece on that. That's reason two. And then reason three, people hire me is because they think that some of the advice I'm going to give them is going to get them out of the grind, and they're going to actually enjoy a little bit of their life and just find some purpose and value and meaning and less aggravation and stress and responsibility and worry. So that's the order they hire me. But after they've worked with us for a while, they reverse the value. So I would say still to this day, when it's a transaction that's money driven, people are hiring. Well, if they hire me for one-on-one type stuff with my team supporting, it's usually a high income person, 7-figure income. It's usually a family with net worth $50 to $200 million. They're trying to do some estate planning. That's people working with me. But if they're working with my team, it's a lot of just tell us what we need to do. And I just want somebody who's not trying to sell me something. I'm so busy running my company. I need somebody to look at the tax and the structure and just look at things more holistically. Something I said on stage last week was to a bunch of home builders was, I think the challenge is that attorneys and accountants think linearly, and they think chronologically. So it's, what do I need to do today? It's whatever date it is. I got the next tax filing. I'm going to do this thing. Then I'm going to do this thing. Then I'm going to do that thing. But business owners need to be thinking about, how does this structure that might save me taxes today, how is this going to affect my exit? All right. So the exit, at the end of the day, the exit's a really important thing. So we do a lot of restructuring to make sure we're reducing current tax. We're not putting people in a negative situation when they sell, whether they have an asset sale or a stock sale, because they're treated differently. And at the same time, how do we create some estate planning situations where the clients still retain all the control, but whatever they don't use is out of their estate? Because I was just did this analysis in Massachusetts. 52% of the income is going to go to taxes, and then 52% of what's left is going to go to taxes. So these guys were working, making a lot of money. They're going to, every 23 cents, every dollar they make is only going to be 23 cents to their kids. And so, back to your thing about exit, is it's really aligning, what do you want the outcome to be, and providing people with a map that will help them get there. That usually is a little more general contractor type of, how do we bring in the attorney? How do we bring in the accountant? How do we bring in the business broker? How do we bring in the other advisors to make this thing go? Because they're all working toward one path. And the business owner has a lot of things going on, and they don't know which path. They say they want to sell in 5 years, but there's a lot of things that are going to happen. And I haven't met anybody who said they're going to sell in 5 years and who actually sold in 5. Some sell in 2, and some sell in 7, and some go out of business in 4, and some pass it on to their kids. So, what do we do? It's a lot of analysis on, where the heck do you want to go? Are you sure? And then let's put a plan together with a lot of contingencies. So it starts with consulting, and more than half the time there's implementation in some area, depending on their team. So some people have really great team members, and others don't. So I'd say it's consulting. Holistic consulting is where we spend our time, but there's always a tax element that we guarantee to pay for it with tax savings, or we give people their money back, which seems to work.
I mean, that's a pretty good sales pitch. I want to ask something like top tip or tips for businesses in different moments because I think you've got like I think there's nuggets of gold, but it depends on where you're at in the journey. So if you're that business that's kind of more in the startup scaling phase and you're pushing to that 500,000 take home, right? Take home, not business revenue. What are a couple things you might want to be considering in that moment?
Yeah. If you're early stage, if you're early stage, you are probably plowing back a lot of your income into the business. And so what that means is you're making money. What it means is you're getting a K1 at the end of the year from your accountant that says you got to pay taxes on $500,000, and you look at it and say, but I only took out 200. And you're wondering why that's the case because you made money, but you're putting the money back into the business. And so nobody likes, by the way, you're not alone. Nobody likes phantom income. Nobody likes to be taxed on money you didn't get to hold and take home and spend or invest. So if you're in plowback state and you're starting to make some money, 100% set up a C corporation. Your accountant said, don't use a C corporation. There's double tax. And your accountant is 100% wrong. Like if you have $500,000 or more of K1 and you should fire your accountant. Like with 100% certainty, you're getting bad advice. And they say double tax because they didn't do the math. For example, corporate tax rates top out at 21% federal, individual tax rates top out at 41. And so if you make $500,000, Devin, your K1 after you took your salary and whatever else you made, you're going to pay $200,000 in tax. But if you had a corporation, you'd only pay $100,000 in tax. That frees up another $100,000. I don't know any founder who doesn't need another $100,000 to grow. I don't know any. And if you're not sure, like I speak on stages all the time, I do the math, I show it to them, I give them spreadsheets. Here's how this works. And essentially, think about it. If you could check a box on your tax return that said, I want to pay half the tax now and pay half in 10 years at zero interest, would you check the box? And if you say yes, then you should seriously consider having a C Corp because it works. When I'm working with accountants who work at Deloitte and PricewaterhouseCoopers at the highest end, every single one of their clients has a C Corp, if not more than one. It's so common at the high end, and it's not common at the low end because these accountants don't understand. They haven't done it. They're paper processing people. It's not their money. They don't know how to get money out of a C Corp. There's tons of ways to do it. Like they just want to get the return done and want you not to get audited. Like that's their success story is it was in on time. It's not my fault. It's not late. And there's no audit. And that's success for them. And that's not success for you. So I can tell you the greatest bit of advice, the most telling moment, just to share one story, is I was recommending something that was a strategy that had some risk to it that would save this person in Boston $1 million a year. And I brought in an attorney who was the leading expert in this particular nuance of tax. And I had just met him. I never worked with him. He wasn't on my payroll. I just brought him in to answer the questions for the client. And the client asked him, would you do this thing that Chris recommends? And this attorney said, no. And the prospect client looked at me and said, well, this is going to be a short meeting. And then the guy said, hold on. He said, I answered the question because I always tell the truth. It's one of my core values. You asked me if I would do it. And the answer is no. But the question you should have asked me is, what do I think you should do? And he said, I'm an attorney. I work at a law firm. I don't get on a phone call with somebody unless they pay a retainer in advance. And then I take the money out of the money you've already sent me. I don't even have to ask for it. So I don't even talk to you until you've paid, and then the money's guaranteed. You run this giant book distributor and you ship things all over the world, and you find product from other people and you warehouse it, and you work through all the complexities of managing this business. You take more risk in a week than I probably have taken in the last 5 years. And so the question I wouldn't do it, but I don't know what my decisions have to do with you at all. I think it's a completely flawed question. And so I just appreciated that moment that attorney just pointed out, you're asking the wrong question. And so understanding it's such an important thing for entrepreneurs, going off on a little bit of a tangent, but the thing is, what does the person you're working with want as an outcome? How do they make decisions? What's their constitution? What's their kind of goal? How are they oriented? And then take that and realize that that's their norm. So I do that with clients a lot. They ask me questions and I said, well, let me just explain to you again who I am. Here's my strength finder and here's my Enneagram and here's my wild factor. And like, here are the things that describe me, just so you know, this is my bias. Like the answer is going to come this way, because this is how, like my strength finder is strategic, individualization, connection. So I think big picture, way down the road, I appreciate that everybody's unique, but I realize everything's interconnected. Like that's so my results are going to be driven toward that. I'm going to be much more strategic than I am tactical. And so, so that's one thing, is thinking about that C Corp. If you want to have more cash, you don't need a bank or a line of credit. You just need to change your corporate structure or create side by side C Corp and S Corp, or C Corp and partnership, LLC. So like that's the easiest thing that generates money every time. So people will often pay us and we'll have a guarantee on savings and we figure it out for them in 7 days.
I love that. Let me ask Angela's follow-up question, because I think, I think listeners or watchers might have the same thing. Like, why is their accountant or financial advisor not giving them different advice? Like, why do they not know this?
I get that all the time. I get that from billionaires. I get that from millionaires. I get that from people who don't have money, who are just starting out. Why are you not getting good advice from your advisors? There's a million possible answers. I'll be kind and say they're doing the best they can. And they could be doing the best they can with whatever limited experience they have, with whatever biases they have. I mean, financial advisors, ask people how they get paid. Like, it's a good question. Everybody says, well, I'm in it for you. Well, maybe you're in it for them, but like accountants bill out hourly, right? Attorneys bill out hourly or by the job. So they want to get the job done. Like, this is what they do. And attorneys and accountants, again, they think linearly. This is how they think. They don't think creatively. So I've worked with thousands of attorneys and accountants, and I've said, well, how about this? Could this work? They're like, oh, maybe, yeah. But that's just not how that's not how they are oriented to look at business. This is the thing they've done. They solve the problem. They move on. They know it works. It's risk-free. It sounds great. They're not ideation people, right? So just see how many good ideas they have. So, and then other advisors, the attorney, here's a challenge. The short answer to Angela's question, why are you not getting good advice from your advisors? It's because of Jeff Bezos. We're going to blame Jeff. And I'm going to blame Bezos because if you go on to Amazon and you want to buy Expo dry erase markers, you will find the best price. And who's going to deliver? I'm in Dallas, so they'll deliver it to maybe like in an hour, right? Like I can get them anytime because they're right around the street, like on the corner. But if you know what you want, Amazon is awesome. Have you ever tried shopping like for an anniversary gift or a birthday gift on Amazon? It's hard. It's not like Toys R Us where nothing's like Toys R Us, right? But it's not there anymore. But you don't get to walk around and touch the things and see what they feel like. So what happens is the world has become, I know what I want. I go shop by serial number, by name, by product design, by description, and it comes right up. However, the algorithm figures it out. But if you don't know what you want, it's really hard to get creative solutions or get creative gift ideas on Amazon. You just won't. And so what's happened in this whole super subspecialization world, plus heavy, heavy, heavy regulation, attorneys will only give advice on legal things that they have malpractice for. Accountants will only give advice about accounting things. Investment people will give advice about investments, possibly insurance if they have that license. They will only talk about the things that they get paid on because their compliance departments will only let them write about the things that they know something about. I had this conversation with the head of family office at one of the big 4 accounting firms who said your conversations about with families about the purpose of the money and the legacy and all the challenges they have with leaving money, and how do you not just leave the money for the kids, but how do you prepare the kids for the money, is so important. But I don't even know where to begin with this, and I'm not a licensed therapist, and I can't talk about it because I'm afraid. And so the challenge is everybody does the thing that they do, and all these companies, Merrill Lynch, Goldman Sachs, Bank of America, Wells Fargo, like they have systems in place for what do you do? This is here, do this. This is here, do this. This is here. If somebody has 1,000 customers, it is a process and you are in the algorithm, and that is all you're going to get. And the only time they're going to change the algorithm, like change their approach to what they recommend, is what? If it benefits them, right? If the outcome leads to more money under management, more insurance commissions, more legal documents being filed, more accounting billable hours, unless it leads to more for them, they're not going to change the model. So there's no issue, like bespoke and customization from a big company. Good luck. Right. So, I mean, they're doing the best they can. It works for a lot of people, but if you're an employee, it's fine. But if you want more, then if people aren't getting sued for providing okay advice, they'll continue to provide okay advice.
It's so true. There are some other questions, but let me ask the follow-up question on kind of that next size business. So, 500K, and now you're scaling past 1 million. What's your typical conversation with those guys? What are some things they should be thinking about as they're scaling beyond now?
Yeah, as they get to that bigger level, now it's the you got the tiger by the tail, and it's, you still have the same tax conversation. Now you have to start having the exit conversation. What do you want this to look like? You are going to exit some way, right? By choice or by, or not by choice. Like there's going to be a moment. So you have to start thinking about, what do you want this to be when it starts making money? Is this a lifestyle business? Is this something you can sell? Where do you want it to go? How do you structure an advance of sale? Super important. Most people getting over 1 million, their life is they're making money and they're miserable. Like scaling is hard. It's not, most entrepreneurs, if you think about the life cycle of a business, you need the entrepreneur and all that energy early on. But then when it comes to scale and systems, it's really painful because it's a different part of the brain, right? The evangelist who gets people excited about the new idea is not the person to put everything in with systems and structures. It's a different person. Way different person. So you've got to build teams and figure things out on, what do you want? What does it look like? A massive shift in interest, in your interest and your intention to get that thing going. It's a lot of work. And if you don't plan for it, if you don't plan for your exit properly, you will get destroyed on taxes. You'll also get destroyed in the negotiation because you're going to probably sell to somebody. It may be very few people will ever sell a business. A very small percentage, 1% might sell 2, 0.1% will sell 3. It's a very small number of people who are going to get a lot of bites at the apple to figure this out. And buyers buy a lot of businesses. So like your greatest day, I miss the placement of one sentence in my deal cost me $3.8 million. That sucked. Like it just does. And so it's the evolution of your business that's going to require the evolution of the founder. And that's going to be either you become a different person or you find people, to help you do this stuff, because it's hard to change. It's really hard to change how you are.
Love it. Let's go one step further. Let's talk legacy, and then we'll go rapid fire through some of these questions. So the business owner that's either had the exit or is nearing the exit, and they're now thinking global picture, wealth protection, wealth transfer. What are some things they should be thinking about?
Yeah, the legacy is a really important question. It's one. I'm working with Jason Cisneros at Build to Exit. We're doing some really cool stuff over there right now, and I've got a lot of exit consultants that I've worked with over the years for the reasons you probably get from this interview. Loss of identity is a big problem, right? People getting attached to that business. When I got kicked out of a company I started, I truly felt like my soul had been vacuumed out of my body, like the opposite genie approach, right? Instead of the genie appearing, it was like the genie was gone. Like who I wasn't there anymore. And I talk about that in the book, by the way. This whole idea of your identity is a big deal. What is this? And then what do you want? Truly getting comfortable with what do you want your identity to be? What does this look like? How do you want it to go? What people don't realize too is 40% of anything above 30 million is going to go to taxes. And I cut my bones, earn my bones, I guess, if you will, on the estate planning side, reducing estate taxes by like 80 to 95% for most families and still keeping all the money in the family. So it's something I do really, really well. Like my tactical math techniques and tools on that are excellent, but that isn't the hard part. The hard part is having the conversations about where do you want the money to go? What does it look like? Who's going to get it? How are they going to get it? Are you okay with it? Because there are ways to get money out of your estate and still have access to the money. It's absolutely possible. But attorneys would generally tell you, nope, if it's out of your estate, it's out of your estate and it's gone, or it's in your estate and then it's subject to tax. Those are your two choices, and they're 100% wrong. Like this is not the case. So, for people who are getting ready to sell or who have sold, that having somebody guide you who actually understands that the emotional component to your family dynamic is way more important than the technical components of the financial plan. Because this is who you are. And I've got families that have a lot of money and one of the kids was in the business and one of the kids wasn't, and they won't be over the house at the same time. And like that is the biggest thorn in the side of the mom, is the fact that the two kids won't be in the house for Thanksgiving. Like it is the biggest issue. Like, and that's a more important thing. Zeroing out $100 million estate, not hard, already done. But getting the family working with the kids to just take a different perspective on what happened. Like son loves the business because he was involved in it and it was a lot of time to spend with dad. Daughter, dad wasn't around. So it was because he was busy building the business. So for her, it's the thing that meant less time with dad. For him, it was the thing that meant more time with dad. Like, so sometimes like there's so many complicated things around that side that are so important when you get to that level is understanding in financial planning. I thought early in my career that spreadsheets would sell. Now I don't use spreadsheets. I don't show illustrations if I'm using financial products. I get comfortable and understand what the people want and then explain and create confidence and trust that we're going to get them what they want. And they don't even look at the stuff like the documents in the chart. They just want to know, oh, I've explained this. You've asked the important questions. We've gone over what's there. The how is much less important than the what. Right? The who is the person that they trust to get the work done, but you really ask the important questions and I feel heard and understood. And now I'm less worried about all these things I was afraid might happen.
Love it. Let me rapid fire. Let's get some of these knocked out. So we'll have to be kind of quick on it. Doesn't having a C corp and an S corp mean more paperwork? So isn't there more paperwork there?
Would you spend an hour a year on paperwork for $100,000? And if the answer is no, then whoever wrote that, I love you. And I love your commitment to protecting your time. I just want to know what, if you're making $100,000 an hour, you're doing on this call, other than are you flattering the heck out of me that this was worth $100,000 of your time? So yes, there's more paperwork, of course. But what is your time worth? Like that's the whole, how much time would you spend trying to make $100,000? I mean, cutting your taxes in half, is it worth more time? Yeah, it's more paperwork. No kidding. Easy. You should love that paperwork. It's not that hard. And the only paperwork is if you're old school is writing the check to the accountant to file another tax return. Like you're not doing the paperwork. It's one more click actually it's probably no more clicks. You're just paying more on your check or on your ACH or on your credit card to the professional who's doing that for you. So yeah, of course, but right. Do that paperwork.
Love it. Any qualifying questions or red flags when picking an accountant or advisor? Any quick tips there?
Yeah, they're all red flags. Like, I mean, red flags, they're all, yes, it's the question becomes, how many clients do you have at this size? Or what do you typically do? Or some accounts you can say, here's my return. What would you do? right? That's an option. Like, what would you do with this, and see if they'd give you a recommendation. Another thing is, I mean, this may sound a little self-serving, but it's not. Find people you trust who can give you a recommendation, because accountants aren't really good business people. They just aren't. Like, they're not marketers. I shouldn't say not good business people. They're not marketers. It's not somebody who's super good at the human connection and likes to market and put content out. Probably never had a dream of filling out a tax return. Like, that might be a stretch, but I think I'm okay there. So it's, yeah, I think it's asking other people, like finding people in the adjacent space and asking for recommendations. That's a big one.
Love that. I mean, that's what we preach, right? You're one connection away from whatever you need, and typically better
Ta-da!
advisors. There you go. Uh, Thoughts on ESOPs or any conversations on that?
Yeah. So an employee stock ownership plan is a way for you to sell 30% or more of your business to the employees. The benefit of that, one of the bigger benefits, is you get some liquidity because the bank will lend you money to have the employees buy you out. So that's nice. You get a partial buyout, or maybe all buyout if you sell it to the employees. The super cool piece of that is that you get to repay principal and interest with pre-tax dollars. So normally, if you buy a company or you borrow money from the bank, if you borrow $100,000 and you have an interest payment of 6%, you've got to pay $500 a month. Every month, you get to deduct that interest. But when you pay back principal, you have to earn 200 to net 100 to pay the bank, or you pay the bank back and then you get that phantom income check, because you have to pay taxes on the money that you paid to the bank because it wasn't deductible. So the ESOP lets you deduct interest and principal. That's super cool. And if you sell the company and you roll the money into what's called qualified replacement property and you hold it for a period of time, you can also not pay tax on the sale. Also super cool. However, nothing in life is free. As soon as you sell the company to your employees, you have to include all the employees, even the ones you don't like. And two, you now have a partner who's the Department of Labor. So the Department of Labor, the ESOP is a qualified plan. You now have the U.S. government as your partner. That's the current administration and the next administration and the one after that. And however the hell they choose to have you protect your employees, that becomes your partner. Holy shit, that sounds terrible to me. So it could work in the right circumstances, but there's another side to that. So ESOP could be cool. If you're talking about a sale, a company that's worth more than $20 million, happy to talk to you about it and see if there might be some other ways to do that. So sometimes people do things. There's always more. There's more than one way to skin a cat. Pete is not going to love that message, but I don't think Pete is sponsoring Devin's show today. So we've got, there might be another way around it. So ESOP could be great. Doesn't come without some potentially significant concerns. And for that person earlier, if you don't like paperwork, that first question, you'll hate the ESOP. You should not do the ESOP because that's a ton of paperwork. You would hate it.
I agree.
Thank you.
So EOTs are pretty good.
Yeah, there's so many. It's a facts and circumstances. It's so hard to pick what's the right structure just off a quick question. Devin, so hard. I mean, there's so many things that go into it. I don't want to sound like an attorney, but almost any structure, if it's there, there's a time and a place for it. But, if somebody's pitching you an ESOP and it's an ESOP provider, that's like going to the orthopedic surgeon and asking what you should do about your knee. It's like surgery's going to be the option because that's what they get paid to do. Like, it's highly likely. But if you go to see an acupuncturist, they're going to recommend not surgery. So
love it.
Just be mindful of who's making the recommendation. So that's another thing. Like, if I give you recommendations that you should do legal work, I'm not an attorney. Like, you can probably find some comfort in the fact that I'm recommending something I'm not going to get paid to do. And not just me, but anybody. So that's part of part of this too, is find smart people. If Angela's telling you that you need to get something reviewed or get evaluation or do something else, that's not what her firm does, then you should take that advice, like, with a different level of, whenever somebody recommends something they're not going to do, you should take that with more. Not that every time you recommend something that's self-serving, it's bad, but when you recommend something that's not self-serving, it's almost always good.
Love that.
Yeah.
Chris, how can people connect with you? And Angela, you have to ask some questions offline just because we're running up on time. So, Chris, how can we connect with you? Where can people go? Maybe plug Draft TV as well.
Yeah. So chrisjarvis.me is my personal website. BeTheGiraffe.com is the website for all things Be the Giraffe, the Giraffe University, Giraffe Money, all the things that we do. BeTheGiraffe.tv is the television show, and Be the Giraffe TV on YouTube is where we have cool interviews with people who have done amazing things, but including Devin. Not that he hasn't done. I wasn't saying amazing people and Devin. I was saying amazing people, including Devin. And it's people's stories of overcoming adversity, and nobody's journey has been just a meteoric rise. It's been a straight line. Everybody has had twists and turns. So the story really does help you get to know the people on the show. So if you want to hear from people in a real authentic human way, Be the Giraffe TV or Be the Giraffe.tv, either one is a show that's a gift to help people get motivated and inspired by people. If you're sick and tired of listening to my voice, I ask questions and then I listen. So but if you want more of me, either of the two websites are great. Make sure you take the wild factor so you have some context. chrisjarvis.me, start here. And you can take the wild factor and find out if you're an eagle, elephant, monkey, dolphin, or penguin. Then you will know what you need to do with that.
Already got the site
Love
up,
it.
Chris.
Thank
I'll
you.
put all those links below on whatever platform you're listening or watching this on. And with that, Chris, thank you for your time and your wisdom. I'm sure we could go for another 2, 3, 4, 5 hours just on the conversations and stories you have. But appreciate you, brother.
Thank you, my man. I appreciate you. It's been too long, and thanks for putting this out there.